All righty, traders. This is Blake. You are listening to the Face Show. And what the hell's going on with Sterling? Did we just what happened there, Ryan? Did we achieve world peace? K-Man, do we have something going on? What is going on in Sterling this morning?
Think
Holy.
the market ran a bit short, and then Starmer surviving. Um, yeah, I think that's about what's going on. Euro crosses are also a little bit off the boil. If you look at if you look at across the spectrum, there's a little less demand for euro crosses maybe ongoing as well. But it's basically the market trying to trade Starmer's departure and then needing to scramble back, and that's what we are seeing now. I don't know if it has to do anything with what you actually posted as well, which has
World
been
peace?
found. Sorry?
World peace?
No, the
Cure for cancer?
alphabet, seeking to
Oh
build
yeah.
money via dollars, Swiss sterling. There's maybe a little bit of that in there as well. If people want to lend money to Alphabet, Swiss is strengthening a bit as well, as we can see. So I don't know whether it has really to do with it, but it could just be a result of, and everything in the mix. That's basically what I think about it. There's not a lot has changed. We don't have necessarily a much more stable government because probably the worries will start again every other week. So, but yeah, I think the market is just getting out of positions. The options have been trading sterling very, very short. Actually buying a lot of downside. So if they buy their puts back or sell their puts back out, it can all have this kind of effect. I wouldn't really make a whole heap of it, but if you look particularly at euro sterling, what is noteworthy though is that we are banging our head every time against 87.20.
Yeah.
We had a
Yeah.
little bit of a shoot yesterday on the potential that Starmer was going to leave, but if you take away that 87.20 is still a bit of a level there on the euro sterling.
Yeah, it looks like this. Well, I would be looking right around 87.40. That it stretches all the way back over to here. It looks pretty big, but regardless. Thank you, K man, for the update. Yeah, and there's a big lot of liquidity being sold this week between tens out of the U.S., 30s out of the U.S. You got Google is now looking to raise capital, and we were talking about this morning in the Forex Analytics chat room just take a look at the Euro Swiss. We're at 127% extension, but I want to take you for a little bit bigger view. This is really concerning, and I have no exposure, by the way, to the Euro Swiss. But I want to show you guys something that's really nasty. We are in a descending wedge right here, which, by the way, theoretically, if we're going to turn, it would be somewhere around here. You'd be looking for wedge support in the Euro Swiss. There's the top of the wedge. Here's the lower end of the wedge. Whether it's there or maybe might be there. I'd probably look at just kind of like the longer term right here. I don't want to get in front of it just yet, but what that really suggests to you is that we're at a terminal stage in the Euro Swiss where it should reverse at some
Sure.
point soon. But I will tell you this much, and this is what I said in the Forex Analytics chat room earlier today in our chat. Just it when you look at asset classes like Bitcoin that can't go up in an environment where it should be going up. That was our tell, months ago that Bitcoin was going to collapse. Same with Ethereum. Euro Swiss is kind of the same thing. If it can't go up when stocks are at all-time highs, and we're within a percentage point of all-time highs in a lot of markets, then what's going to help it. And that's why that's my biggest hesitation trying to play this to the long side. And as K-Man just pointed out, there is going to be some demand for whether it's sterling, whether it's, Swiss franc denominated bonds, because 100-year notes make a lot of sense because that's our life expectancy. And longer than our human life expectancy. So, 100-year notes make a lot of sense. But regardless, it seems like there's some demand for Swiss francs and sterling at the same time, which is by far crazy to me. But anyway, maybe that is a little bit of the move. There is probably a little pre-positioning of the move of the market here. I do want to point out what I was just showing you guys a little bit earlier on the S&P. The S&P, and this is something that if you watch the week ahead video, I said, hey, you have to be careful at this trend line, which we're knocking our head against right now. But more importantly, forget the trend line. What's I think more important about what you're seeing here is that we are creating a lower high, lower high, lower high, and then also lower lows. Now I know this is a hold of these levels. I understand that, but if we continue to create lower highs and lower lows, that means that there is a potential topping pattern that is developing in the S&P. We have so much coming out the next couple of days. Today we have retail sales. We do have the employment cost index. We also have tomorrow jobs report, and then also CPI. I just want to let you all know, I actually was playing on the long side of the dollar. I was short some euros, short some Aussies overnight. I closed those out basically for break even just a little while ago. I'm updated the trades room. If you guys are in the Forex Analytics chat room, you can go into the trades room and see, where I'm, whoops, not one I just put on. You guys don't need to see that, that I just closed out a couple of positions here. You can see them right here. I think that the data over the next couple of days are going to be really big drivers. I think the euro that you see here, we squeezed a little bit further than I thought we were going to squeeze yesterday, but we got up to the highs from September of 2025. It was one of the reasons why I was fading a little bit of euro up here. Same with the Aussie. It was just trying to create a little bit of a double top in this whether it's a bullish pennant, which it looks like, or we get a double top. I think we're going to find that out probably within the next 24 hours. 24 hours and 30 minutes from now, I think we're going to have a good indication of which way this dollar is going to break. But with all that being said, let's bring in Ryan. Ryan, it has been a pretty damn quiet session overnight. I know you just came off a podcast. What do you see happening right now? Anything that has your attention?
Yeah, obviously you've spoken about dollar yen, yen in general. I think we got.
I haven't spoken about the yen, so why don't you go ahead?
And you haven't? Okay, so I think both me and Kay are getting a bit of a twitch to be short yen pairs, at least for the short term.
Oh, that's interesting.
Dollar yen's bang on one of my big levels, 155, and it's been holding there. I think if we get a break there, it could be a bit of a runner. But I'm going to try and time it. We've got retail sales up at the bottom of the hour. I think there's a potential for a risk that they come in better based on the consumer credit data that came out Friday for December, so the same month as retail sales. A big jump in consumer credit, 24 billion. Versus a prior, I think it was 9-10 billion. So that would suggest we might be getting a good number in retail sales. So I might tap a bit of dollar yen if we get a pop on that.
Oh, that makes a lot of sense to me. So where's the itchiness to be long yen coming from? I mean, just so you guys know, I'm playing the same direction as you. Again, if you're in the chat room and you're in our trades room, you know exactly where I'm getting into the markets. But what is giving you that twitchiness? And by the way, we had some meetings this morning, so I was not able to listen to the flow show as I normally do. So fill us in.
Yeah, I just think that the elements that have led to yen weakness have dissipated. Okay, we've got over the election hump, and the yen didn't weaken significantly, which was a big risk. That's telling. We're seeing JGBs, firming up a bit. Yields have stopped going up there. There's money going into the stock market. So it's possible that we start to see a bit of a tide turn on the yen because of a couple of elements. Firstly, Japan has a stable government now. Okay, they had a coalition the last election. They needed a coalition to get the numbers through. Now Takaichi's got a landslide win. Market likes political stability. We've got that. She's got all these fiscal measures, which right from the get-go, one of the themes I've been saying about is, yes, it's big fiscal spending, but it's designed to get the economy going. Compare that to the UK, who couldn't fiscal spend their way out of a wet paper bag at the moment. So her measures, as big as they are designed to help the economy. So I think the market's given her a bit of rope, bit of leeway to say, okay, you've got your mandate, you're going to do this spending, we're going to give you a chance to prove it. And I think that's going to give the yen a bit of a leeway to not to weaken significantly further, unless it all goes horribly wrong, of course. So I think in the short term, just getting over the election hump and what's been going on recently, that's all by the by now. So I think we could start to see, we already have, but we could see some further yen strength. But it's going to be obviously mixed in with what the dollar does and what the US does with data and the like.
All right, let me let K-Man jump in here, just because we can kind of review some of these other yen pairs. Like they've been in, I mean, you look at the Euro yen, Aussie yen, Canadian yen. We can look at all these yen pairs. They've been rallying in very, very strong ascending channels for the most part. Depending on which currency pair you're looking at, but you can see just really, really strong moves, pretty much universally across the board. So I got a couple of questions for you, K-Man. Do you feel the same as Ryan? And do you think that is a risk for the yen? But more importantly, do you think that if we do see the stock market actually show a little bit of downside here, could the yen recapture that good old feeling of a risk aversion or risk off, type of currency, like a hedge, if you will?
Okay, that's possible, but I don't think that will be the driver. The driver is, or the question for the driver now is, do you trade Japanese back? That is the real question. We know that the yen, okay, we could argue that buoyant stock markets all across, and we have seen that even with the Nikkei, they have also weighed on the yen, but it was especially the fear of fiscal looseness in Japan, compared to how much time does she need to put everything in place, and is it going to help the yen maybe the second part of the year, which I thought. But if you look at what's happening in the Nikkei and you look at what's happening in the JGB market, it is clear that the market is buying into Takaichi's how shall I say, setup right now. How long it lasts, I don't know. But what I noted, and you look at all the crosses as well in the yen, not only the dollar yen, but it could be somewhere acting as a break on the other pairs as well, because we have seen not everything is down to that, but we have seen other pairs being supported just because the yen was getting sold and people were buying absolutely everything against Japanese yen. That could actually, I'm not saying reverse, but lose a bit of steam. So I would say to be a little careful on yen crosses as well right now. Again, is it a short-term thing? Are investors back buying Japan? In which case, this is not going to be a short-term thing, and we are in for maybe not yen back under 150. But I mean, time will tell. The first leg is positive, but is this not just people getting out of position still? So we're still going to need a bit of time and see data coming out. And we still don't know exactly how she's going to fund it all, right? There's rumors, and there is a possibility to fund some of the tax cuts via, because I saw the results of 2025 in the foreign exchange fund, which were actually enough to cover for a year of food tax cuts. So that's another positive. So yeah, there may be maybe a period of where the yen is going to grab some back of what it's lost of late, and then it will depend on how far this goes, whether investors really are going to pile in. But if we get and but if they do, then this move is not going to be done in a few sessions. It's going to last for months.
Yeah, I was going to say this is not a just a one and done type of thing. I want to just really quick, K-Man. You look at these currencies. I'm just gonna just take a really quick look around, and you guys can see all the charts over here. It's pretty symmetrical with all these yen pairs. I mean, you go to the pound yen. I'm just gonna go through some of these. I mean, we're in this ascending channel and we're knocking our head up against the channel. Euro yen, same type of thing. We're just knocking our head up against the channel as well, creating lower highs now. Aussie yen and Kiwi yen have acted a little bit better, but you can see the Kiwi yen also knocking its head up again, and it's failing actually at these highs right now. And then the Aussie yen is too. So and the Aussie yen's actually a little bit different, and the reason why it's because it's had such an explosive move. You can see the Aussie yen is actually challenging the underside of a previous broken channel, long-term broken channel, and also if we could end up creating a false breakout if we actually do get a reversal. But the importance here is, I think from a risk reward perspective, shorting yen pairs makes sense, but the timing has to be right because there is a cost to carry yen crosses to the short side, right?
Yep. And that's where the Bank of Japan should come in. But they probably, I think they raise rates in April. I think they hike in April. We can argue about real wages, etc. But what we have seen from the companies, they are willing to play the game. They also will be more willing to play the game now of hiking wages, looking at their stock value, because companies are really getting bought up. No, I think they can lend a helping hand. But again, how long is this investors getting into yen, or is it players getting out of short yen? And we are probably too close still to the elections to go and say, all right, investors are piling in. They can be, and I think they may actually, because as you know, I've been talking about it. I think but it's my play for the second half of this year. But I may have to revise my timeline there. That yen is going to make a comeback, but yeah, we need to see whether the investors are buying this. If they do, then the party is over for everything against the yen.
Yeah, and there's
The yen will strengthen versus everything because there's no reason for it not to, since it has been weakening versus everything for years now. But especially once we had the election of Takaichi and her promise to go extra loose on the fiscal side, which is still a bit of a risk. I mean, there can still be one more leg coming when she will really tell us what she is going to use to fund everything, right?
Yeah, and so this is now I do want to move on because we're talking currencies. It's it's a small segment of traders really focus on currencies. So I don't want to spend too much time here, but it is a big deal because you hear equity market traders talking about all the time the risk of this of the yen carry trade collapse. I don't know how big the carry trade is these days, but I mean it's still probably fairly significant. I mean, because you know, let's face it, Japan's at you know you know 70 75 basis points, and you got other central banks that are 3 percentage points above that. So I mean, I guess you get carry interest wherever you can. So, but it's not like the days where the RBA was at 8% and the BOJ was at 0. It's
Yeah,
not. We are not in those days that we were
that's
in the
decades
early
ago.
2000s.
That's 15, 20, 30 years ago, you know.
Yeah, I know. That's like that's a long time ago. And I think, you know, you always hear like equity market traders, like stock market traders are like, oh, the yen carry trade, it's gonna collapse. And it's like, but it's not as juicy as it was
No,
20 years
absolutely
ago,
not. And I
you
think
know?
the volumes are, regardless what people are reporting, who think they know everything. For as long as I don't see bank reports, I won't believe whatever comes on X. But I don't think it's as massive as it used to be. But it's there, and it's there in the currencies that are either high yielders, which are Mexico, maybe even Rand, and then
Yes.
ones that they traditionally trade, which are dollar yen, maybe euro to a much lesser extent because they only have like 2% interest rates. But I'm thinking about stuff like Aussie yen, and Aussie yen is always been a very, very popular carry trade for Mrs. Watanabe's sons and nephews. And I think it's even, I don't know now, but it's been for a very long time the second biggest outstanding on their in their portfolio. So for even for those kind of currencies, it may act as a little bit of a break if the market tries to get out of the carry trades. What I would think though is, unless we get a big equity market fallout, it's not going to be everybody through the same gate at the same time. It's not everybody trying to take the eye of the needle exit. It's probably going to be smoother, because we still have, I think, time before we know exactly what Takeichi want to do. But in the longer run, I'm as I've been saying, I'm starting to change my view on the yen.
Yeah, it's interesting. You've been a yen bear for quite some time, so it'll be interesting to see what happens from here. And this is something that I think everybody should be looking at, just as far as the Aussie yen goes. And I'm just deleting all like some of these old lines that I've had there for like the last I don't know 12 months or so. But I don't focus on them because they're not close to where we're at. I'm just trying to take a little bit longer term view. This is a false breakout and developing, and that's something that I think would be a really big risk for the Aussie yen if it does turn lower in the days ahead. And that goes into what else we really need to talk about. We have really important data coming out this week. We have the jobs data coming out. We have the CPI on Friday. We have retail sales today. The ECI, don't think that the employment cost index is not important. It's very important to the markets because it's an inflation gauge that people are going to be paying really, really close attention to. I guess the question I want to ask Ryan really fast, and let's talk about the data. We have, as I said, we got ECI and retail sales here out shortly. And then you start looking at the stock market, right? Where, we have that lower high being created. Again, what I was pointing out a little bit earlier, lower highs and lower lows. And this is something that if, again, on the week ahead video, I think is really important for a dynamic of something that's trying to build some sort of, longer term top, maybe some sort of distribution, in the markets. If you're really in that camp, which I'm in that camp because of the long-term channel that we're in, and we're at the top of the channel. So if we are going to build something bigger here, and we're going to really start to reverse, these need to hold. We can't hit all-time highs from here. If we hit all-time highs from here, that is off the table. But right now we are trying to do it. What is good data or bad data going to do to this market? And that's a question, age-old question, I think is really important that I don't have a good answer for. I'm in the camp that if employment data is good, let's talk tomorrow, it's really hard for stocks to go down when we are creating more jobs than expected. But when you're talking about retail sales, maybe a little bit different story. If conditions are really loose as they are right now, people feel that the conditions are loose, and people are not spending money, or retail sales come in worse than expected, that could argue that the Fed will stay looser for longer. It will support stocks, period, end of story. But if the data is too weak and consumer spending is collapsing, which we haven't seen in the top 10%, the upper end of the K-shape economy still is spending, keeping people afloat. Shit, I know I live in a little weirder area than most people, but I just saw the most gluttonous spending on the face of the planet during the Waste Management Open, literally just a couple of days ago. And I know people that are spending thousands of dollars to rent out a bar patio just to entertain women. People are still spending money frivolously around here. And so, that part of the K-shaped economy is still working right now. And it may, you may not have the lower end spending, but the upper end is still doing it. So I still think that as long as they are still spending, it's hard for data to really roll over. But going back to the question, Ryan, what is data going to do for us today? Like we see data that comes in better than expected. Are you going to see risk, sell off, or do you think it's going to support stocks?
Depends what risk you're talking about. If you're talking about US risk off, risk on,
yes,
that's one thing. Let's keep calling what everyone else is calling it the sell America trade. You're probably going to see a bit of a reverse. Dollar rising, yield maybe coming down in that aspect. But yeah, I think we know that it's the top 3-5% that have been keeping retail sales afloat. So if that changes around, if the bottom lot have suddenly decided to have a spend up at the end of the year, then we could get good numbers. Or they may not outweigh if the top end have stopped spending, but the bottom end have started spending. It may not be enough to counter it, so we may get a negative one. But regarding in the old days, if you had good retail sales, it was good for stock markets because it was good for retail firms. But in this day and age, good data is not necessarily good for stocks because it means the Fed not cutting rates. But good data, it's going to pile more pressure onto good old Mr. Walsh if he comes in, because he's then got a strong economy that Mr. Trump wants him to cut rates into. So
yeah, exactly.
Every good piece of data is a bit of a brick on his shoulders, shall we say?
Right, exactly. That's that's a topic of conversation. Like I said, when we're dealing with CPI, and tomorrow's going to be the real test of the market, is when we have the jobs data. I think the jobs data is going to come in line, maybe slightly weaker than expected. How does the stock market absorb that? And does the stock market actually rally on a slightly weaker data? I think it's the porridge is too hot or too cold or just right. If as long as we're within a band of whatever the data comes out, as long as it's not too hot, not too cold, I think the market reaction is going to be good. I think you'll see stocks supported. Anyway, we are less than a minute away from data. You can see the retail sales is right here. I don't have the ECI on the data flash, but I have it on another screen to my right. So it's coming out in about 45 seconds. We have the S&P to the left, dollar index right in the middle. And I have to say that the dollar got its shit slept out of it yesterday and has yet to really recover. Which looks very vulnerable. If you're looking at the Aussie, it looks like we can pop right above 71 cents and get to 71.50. And the euro, looks like we can get back to, on weak data, we could probably see the euro back at like 119.50. Yields are pulling back right now, and that is something that needs to be noted as well. K-Man, any last minute words here before
10 seconds, guys. 10 seconds.
Yeah, 10 seconds. 10 seconds. Ryan, I know you'll be screaming, and you're in the chat rooms reporting the data. put it out on social media. Here we go.
Tails. Flat. That's a downer.
Flat. And so we are, and I don't see it popping up here, but I see it.
So much for all that consumer borrowing on Friday. Absolutely flat across the board.
Flat across the board, and we are seeing the dollar weaken just a little bit.
155 dollar yen.
Stocks didn't move a whole lot. Canadian or dollar yen is actually breaking lower below 155, and that's something that I know you guys. Obviously we've been having this big conversation about the yen, but you can see the dollar yen starting to roll over below that 155 level. This is the bias chart support, by the way, guys. And if you guys, we pull up this data every day. And you can see this is critical support here for the dollar yen at 154.90. We're basically there right now. So you can see it right here. That's data that we came up with yesterday. So we're testing that level. Pretty important here. K-Man, what's your read on the data and the moves that we're seeing right now?
Don't change the theme for the dollar right now. I've actually gave the yen a little tap, but yeah, just for a quick 10 pips on half of it. Yeah, nothing really changing for the dollar, but it's not extremely positive for risk. So when the consumer is not doing great, maybe that's what dollar yen needs to break. I've got 80, but I mean, it doesn't really matter whether it's 154.80 or 90 on the dollar yen. But yeah, we are testing it, and let's see. Both euro dollar and Aussie stopped at interesting levels that you covered already before. So 119.20-ish and 70, what is it, 90.95 on the Aussie dollar.
So this is a little weaker data. See, this is the problem, and this is why if you're trading equities, right? The data came in flat, as Ryan yelled out, which is worse than expected. We saw the dollar weaken a little bit, but stocks like it because stocks are like, oh, okay, look, the consumer's not having a great. The consumer's not doing great, so the Fed's going to stay a little looser. Stocks are like, I like that. I like it. It's it's not horrible if you're trading equities, as frustrating as it is. They are holding up very well because the data is weak, but it's not like collapsing weak. It's just kind of shit.
Well,
right?
we did look at some plastic spending in December, as Ryan mentioned as well on the Flow Show, and there may have been an expectation for retail sales to beat, but this is a pretty weak one. And yeah, stocks may be we're in this scenario. Whatever happens, stocks always go up. But yeah, I wouldn't touch it right here and now. If it breaks 7,000 again, then I think we're off to the races, S&P. But yeah, I think that what those numbers tell us until tomorrow, because the big one is tomorrow, obviously, right? But what those numbers tell us is that it's not time yet to pick the other side, to start trading the other side of the dollar after the weakness. It just delays it to potentially tomorrow if we get a beat, but that should be a set of data which just keep us doing what the market was doing already, and that's not being extremely positive towards the dollar, right?
And let's talk about this really quick. This is a longer term view, and most of you are very familiar with this chart. I'm been screaming at the top of my lungs that we're at the top of a channel for literally months, right? If you're sitting here trying to anticipate the top of the market, it's been grinding at the top here of this channel since October of last year. That's 5 months. If you're, and so many equity market traders are like, oh, we're at the top of the channel, I'm going to buy puts. I mean, if you've been buying puts for the last 5 months, you've been wrong for 5 months and you are getting your ass kicked, and your time is money when you're trading options. And so it is really all about timing. And so we don't know, we could be grinding up here for the next 2 months, 3 months as we go into into summer, especially if data doesn't collapse, but we're still, dollar yen's crossing that 180, 154.80s. But we could seriously grind up here for like literally the next couple of months as we head into spring and summer. And, that's why timing is so critical. And right now we are seeing data that is supportive of a looser Fed that's going to keep Warsh, hey, he's gonna cut rates when he steps in. And that's not what any equity market bear needs to see right now. Maybe there's going to be some black swan event. Maybe something's going to push this market lower. But for right now, and maybe it's tomorrow. Maybe it's the jobs data tomorrow that's going to do it. But for right now, as steady as she goes, we're almost at all-time highs in equities. These are the types of markets where you sell at all-time highs and you buy, in this case, 200-point dips. You see a 200-point dip in the S&P, you buy it down there. You sell any rip back up towards, 7,000, 7,050. Dollar index is under a little bit of pressure because, let's face it, that was weak data. So we're sitting here pressing against these lows. I have no dollar exposure at this moment, and I'm kind of happy about that. Ryan, before we go, anything that you're going to keep an eye on today? Since apparently you guys in the UK have cured world peace and cancer all at the same time. That's why sterling is so strong this morning. Anything that you're keeping an eye on?
Well, we just had trade advisor Navarro speaking, saying we need to revise expectations on monthly job numbers. Now, again, we have to be careful with this because this has come on Bloomberg, and they dropped those F.A.C.E comments yesterday, which made it sound like he's got an insight into the jobs data. But then you read the actual story, and he was just talking generally, as he has been for a while. So they might be doing another one. But still, that's two people from the US admin who are warning on jobs, and I think the dollar's reacting to that as well.
Yeah, great, fantastic. I love it when we have administration people talking randomly and get bits and pieces, sound bits in whatever clickbait that Reuters and Bloomberg can get from us. Fantastic. All right, K-Man, any last minute thoughts? Anything you're really paying attention to right now? I know the yen, but anything specific?
You mean other than what we have been speaking about?
Yeah, anything you're like, I'm really honed in right now on this.
I am, I'm still short dollars, but yeah, I think the metals, if you look at the metals, and we are just going to keep it to gold, perhaps, it's trying to stabilize 5,000, 5,100.
Yep.
And that is really going to be for the short term, the range. And it looks as if we're stabilizing. And I just want to make a very, very early comment that next week we are going into Chinese New Year. So that means a market that is going to be empty for about a week. Yeah, you may think that we are doing this kind of thing. We will see how they trade it, if they still need some before just before their holidays. But then indeed during the week of their holidays, they're not going to be in market, so that may create a little bit of a move there on the precious metals. Gold,
awesome. I think this is, by the
also.
way, this is a perfect Gartley. Like, just so you guys can see it, I'll visually let you guys see it from here to here. I talked about this yesterday on our daily roundup and morning edge. This is a setup that we're looking at Forex Analytix in our community. I am shorting gold at 53.50. The reason why, this is a 618 from here to here, right? From here to here is 161% extension, and this is a 78% retracement. This is about as perfection of a Gartley that you can get, which means that if we get above 5,100, you play it for the squeeze up to 53.50, then you short it. And guys, this is the kind of stuff that you're going to get here on the Morning Edge or on the F.A.C.E show for free. We give you actionable ideas So hopefully you have a better idea of how to trade this market later today. And I want to thank everybody for being here. We've got a few guests that are coming up between now and the time that we launch Trading Analytics. I got the Vixologist. He's going to be coming on. I got to get the date. We had Michael Brown yesterday. We're going to bring in Dale Brasco. I know he's pinging me right now personally, so I'm gonna figure out what day we're going to get him on. Asset manager Dale, and we're going to get a few other key people between now and the time that we launch Trading Analytics. But you guys know we are weeks away from launching Trading Analytics. To be one of the first ones to know, go to ForexAnalytix.com, click right here in the middle where it's yellow, it says something big is coming. Join our newsletter, because if you're in our newsletter, you're going to have benefits that no one else is going to have. You're going to have advantages that no one else that comes in after the fact are going to have. So make sure you just put your name and email in that newsletter so you're the first to know. Ryan, I want to thank you for being all over the map today, and I say that in a good way. You've been on podcasts, you've been on the Flow Show, you've been here on F.A.C.E. Thank you so much for being everywhere all at once.
No worries, and people can be thankful I don't have to show my face on any of them.
Yeah, you have a good face for radio. Let's just
Good face for radio, yeah.
Yeah. And K-Man, thank you so much for being on the Flow Show. I always like getting your views. I missed him today because of a meeting, but I always love getting your views on the Flow Show and your technical views and your macro views. So thank you on all the information on the yen today.
Missing the Flow Show in 2026 is a punishable offense. I think people should know that and realize that if you miss a Flow Show, we'll be coming after you.
Ooh, gosh, that sounds dangerous. All right, guys, so make sure you're listening to the Flow Show. What time is that show exactly in London time?
10:30 in the morning.
10:30 a.m. in the morning, London time. So make sure you guys are all there. I appreciate each and every one of you. Thanks for hanging out with us. Today is my wife's birthday, so I'm going to be a little sporadic in the chat room.
Happy birthday, Mrs. Morrow.
Yes, thank you. She is a young mid-50s. So, yeah.
No spoiler.
Yeah, so you guys, I will. You guys have a great one. Thank you so much for being here. And tomorrow we'll be live for the non-farm payroll. So join us here tomorrow. You guys have a great day. Good luck, everybody. And for Forex Analytics subscribers, I'll see you in about 33 minutes from now. All right, for the Morning Edge. See y'all later.